Hi, thanks for joining me again. If you had the chance to put a single line on this chart to make the price action come alive and help the chart tell its story, where would you place that line? Just pause for a sec, have a quick think. You could put a line at the lows or at the highs. You could mark some of the trends. But if I could only mark a single line on the chart, I'd probably mark that little pullback here. After you've had some supply come in on a chart, often the response, the pullback in response, the depth and duration of the pullback will give you some good information on how strong or weak the market is. You can see in this case, the market pushed higher but didn't exceed the previous highs, then came back, broke below this line, and then showed an inability to get back above it before pushing lower. So that's where I'd place a single line to make the price action come alive and help tell you the story that's unfolding on the chart. Whenever you look at a chart, look at the response from one bar to the next, and that'll help you confirm what happened in the previous bar and infer what might happen in the future. But you also need to put that into context with the overall chart. You need to take a bigger view, because looking at it bar by bar is looking at the fine detail of the chart, and it will give you good information, but you need to put that information into context with the overall chart. If you look here, you can see that price in this case has been moving higher. Price moves in waves of buying and waves of selling. You see a market will have a fairly fine balance between buyers and sellers in the market. And for a period of time, the buyers have the upper hand, and then the sellers will have the upper hand. Generally, the buyers will take the price up a little bit. That'll encourage some profit taking or some supply that's stuck to the left to get out, or even some short sales being opened. Regardless of what the supply is or where it's come from, some supply will come in and price will push back in response. And then in response to the lower prices, you might find that there's strength in the underlying market and the market's in a buy the dips mentality. So then the buyers step up and price moves higher in a wave of buying. That encourages more selling at a certain point, and the sellers come in. You can see that price moves higher and lower in waves of buying and selling. When I look at a chart, I'm always looking at the waves of buying and selling, and then I look at the fine detail of the individual bars to see if I can gain any further understanding of what might be happening on the chart. The chart, it's like a mystery novel, a book, or a movie where you don't know at some point what's going to happen. The outcome is uncertain, and you're trying to gather clues to understand what might be happening. The chart's exactly the same. There's periods of time when you'll be uncertain of exactly what's going to happen, but then there's other periods of time, just like when you're watching a movie or reading a book, and you can think to yourself, I know exactly what's going to happen here. I've seen it before, or I've gathered these clues, and I know what's going to happen. And when that occurs in the market, that's when you need to have a bet in response and see if you can make the market prove you're wrong. And if it can't do that, then you'll make a profitable trade. So you can see the market moves in waves of buying and selling. And just like you compare the bars to each other and the response, you can compare the buying and selling waves to each other in response. You see, the length and duration of a buying wave compared to a selling wave gives you good information. So you can see on this wave here, the buying wave was long and strong, and the selling wave was quite short and shallow. The buyers are in control here, and you can see in response here, the buying wave is very long, the selling wave is relatively short, but now the next buying wave has reduced considerably and the next selling wave increases. Now, this is the longest selling wave you've had on the chart so far. And in response, the buying wave is very short. Then you get two waves of approximately equal length and then a big selling wave in response. Now you can see how the market's changed here. The buyers were in control and the sellers hardly had any influence on the market. But then just here and here, the selling waves increased and the buying waves reduced, and you could see that there was a change in the market. Things had changed, and you could take these clues. The buyers were becoming weak and the sellers were becoming strong, and the market turned around. Now, you can see how sentiment changes in a market. If you only had that much of the chart, you would have thought this was some sort of pump and dump, or the market was absolutely gone. It had had its day in the sun up here. You can see that down here, supplies come into the market, probably profit taking, but we don't know exactly. It doesn't matter where the supplies come from, whether it's profit taking from below, stale supply from the left, or short selling from above. Supply is supply in the market. It's selling pressure, and it looks like price is done. But however, in this case, if you look at this, can you see what that is? Over 3 bars. 1, 2, 3. You've got a bullish reversal come in. And look how high the volume was on the down bar. If that was all selling, how could the next bar be up? If that was all selling, the next bar should be stretching lower, looking for more buyers. Hidden buying most likely came in on at least in the bottom of this bar, and at least a decent proportion of that high volume was bought. And you can see the next bar was up, and then the next bar closed above the high of the down bar. This was a bullish reversal over 3 bars. You noticed in a recent video we saw a bullish reversal. It was over 4 bars. It doesn't matter how many bars it's over. It's a bullish reversal. You preferably don't want them to go on for too long. That can be a bit of a concern. But a 2, 3, 4, even 5 bar reversal is relatively common. Much longer than that, you can get a little concerned. So you've had a bullish reversal come in here, and the market has bought back. So we'll mark that. Bullish reversal. Now what happened next? Price moved up to this line that we marked. It pulled back in response, and the second down bar saw spread narrow considerably, and the next bar was up. It moved back up to this line. This is like the breakout line now. Breakout line. it moved up to the breakout line. And then after 2 down days, spread narrowed considerably and the next bar was up. This time, price didn't move all the way up to the line, which was a little bit weak, but once again, price came back, spread was relatively narrow, and the next bars were up. You can see there's a bit of a pressing nature to the upside forming here. Does that remind you of anything? I'll give you a hint. Down bars, threatening to break down, but instead don't see downside follow through and reverse. Although this isn't bullish absorption, you're getting a similar principle coming through. A pressing nature to the downside, threatening down bars that don't show downside follow through, and then up bars in response each time. Clustering of closes. These are all signs that the market is in some form of bullish absorption. It's not the classic bullish absorption that I've shown previously, but there are signs there. And you combine that with what we saw here, and you're starting to get a change in sentiment occur. This is like a reaccumulation, I guess. Doesn't matter what the name is, just understand that strength is building in this market after you saw supply come in up here. And you can see that continues on here. Another threatening down bar, price pushes down, but there's no downside follow through, and instead price continues higher again. And the final push lower is a very shallow push lower compared to the previous one, only half the length of the push lower and probably half the depth. And then price pushes above the breakout line and it dances around on top of it for a sec. Little mini shakeout here and some testing. And then price starts to push away. You can see how you gather clues in the market and gain an understanding about what might be happening. Just like a mystery. The chart is unfolding in front of you and you need to read the clues as they appear. And sometimes sentiment changes, just like we saw down here. On that bar itself, you would have thought price is going to break down and just continue lower. And instead, there was a bullish reversal in 3 bars. So 2 bars following that, there was a bullish reversal. And it paid pretty well considering price has just broken down. That was probably another sign. With this weakness all up here, if it's a bullish reversal in the wrong place, you'd hardly expect it to be very strong, but it actually paid okay. It paid all the way up to the breakout line, which at that time was the breakdown line. It only became the breakout line subsequently. So it pushed all the way up, and then the response to the downside was only half what the previous response was, or less. And then you had all these bars that looked like price was going to continue lower, but it didn't at any point. On all of them, spread narrowed in the end, and the next bars were up. And they pretty much all formed a higher low by the looks, which was another good sign. This is gathering the evidence. And although you had a terrible sentiment up here, and price looked like it was going to break down and continue lower, it just broke down below this line, regathered strength, and went again by the looks. So in hindsight, what appeared to be a distribution at least the beginnings of a distribution up here, probably turned out to be a reaccumulation zone. There was some selling up here for sure, there's no doubt about it. But the market gathered itself up after pulling back and then rebuilt its strength and appears ready to push higher. Okay, hope that was worthwhile. Thanks for joining me again. See ya.